The first 100 days of any presidency are pretty symbolic. You have a new administration coming in, new members of Congress, and often a shifting of ideals. And this new administration's agenda and priorities often elicit an immediate reaction from the stock market. So how has the stock market historically performed during these first 100 days? And what policies does Wall Street expect President Trump to prioritize during this time? Since 1953, the Dow Jones Industrial Average and the S&P 500 have gone up about 2/3 of the time during these first 100 days. In 2017, when Trump took office the first time, the S&P 500 gained 5.3% during his first 100 days. Here's a closer look at what happened during that time. We see this early growth as soon as he took office, with February being the strongest month. The S&P 500 grew 3.7% as investors and businesses were optimistic about the economic promises that Trump made, as well as the tax cuts. On the night of February 28th in 2017, Trump gave his first public address in front of a joint session of Congress. He spoke about a range of topics, from replacing the Affordable Care Act to immigration to the federal budget and the state of the economy. Many thought that he sounded pretty poised and presidential, and in response, markets rallied that next morning. On March 21st, stocks in the financial sector sold off in response to the Fed's gradual interest rate hikes. Meanwhile, investors were starting to lose a little bit of faith in Trump's proposed tax cuts because they saw how Republicans struggled to repeal the Affordable Care Act. Fast forward to 2025, Trump has new policies to focus on. Here are 3 of the big agenda items that investors are looking at. One is tariffs. Depending on the specifics, they could raise costs for businesses that have to source materials internationally or do business with other countries. And on a macro level, tariffs are seen as sometimes being inflationary because they can raise costs that then get passed down to the consumer. This worries people because if tariffs are widespread, it could cause price hikes across the board, which could spur inflation. We've been in this environment where investors are very cautious about inflation, and if inflation gets bad again, there's this worry that the Fed will start hiking interest rates instead of cutting them. Another Trump promise is deregulation. Trump has chosen a lot of businessmen for executive positions. From Scott Bessent, a hedge fund executive, to lead as the Treasury Secretary, to Elon Musk to head the Department of Government Efficiency. And offhand, Trump has said that he plans to cut 10 regulations for every new one that he proposes. And Trump's first term did away with a lot of the regulations governing banks and the financial sector. So Wall Street expects regulations to be less strict overall across different sectors, which could be welcome news for investors. And the third thing people will be looking for is what Trump does with taxes. Parts of Trump's 2017 tax bill will expire in 2025, so it's up to him and the Republicans in Congress to work to extend those tax cuts. And they may push the corporate tax rate lower. Paying less taxes means lower expenses, higher revenue, and potentially higher profits for those companies, which is good for the shareholders. Of course, there could always be a surprise that impacts markets during this time that's out of Trump's control, whether it's renewed inflations or something else that impacts these businesses. But Trump is gearing up to do a lot during his first 100 days. And considering that he signed over 20 executive actions in his first day, he's already hit the ground running. Investors are waiting to see how the dust settles, and in the meantime, they may have to deal with increased volatility.